Bloomberg Audio Studios. Podcasts, radio, news.
Welcome to the Daybreak Asia podcast. I'm Doug Krisner. So officials from the U.S. and China have reached a framework on keeping TikTok running in the U.S. This will set the stage for a phone call on Friday between President Trump and Chinese President Xi Jinping. The framework was reached in Madrid. Treasury Secretary Bessent confirming a plan for U.S. ownership of TikTok. Tom Orlik is chief economist for Bloomberg Economics.
If we think about this from Beijing's perspective, they've got conflicting objectives. On the one hand, they would dearly love to have unlimited access to leading-edge chips from NVIDIA to accelerate their artificial intelligence progress. On the other hand, they recognize that the US is using access to chips as an instrument of control and negotiating leverage. They don't like that.
That is Bloomberg's Tom Orlik. Now, we'll get some perspective from the Asia-Pacific momentarily, but we begin here in the States, where the Fed's two-day meeting gets underway in a matter of hours. Joining me now is Katy Kaminski, Chief Research Strategist, also Portfolio Manager at AlphaSimplex. Katy, good to see you. Thank you so much for spending time with me. So a rate cut, I think we can agree, seems like it's a sure thing. The question is whether the Fed begins to signal a series of reductions extending into next year. Is that a fair statement?
I definitely agree. I feel like the market has already priced in and has really sort of foregone the conclusion that we'll have rate cuts this week. But what I'm really interested in is how many and what tilt do they make so that we kind of understand the trajectory of the Fed as opposed to just this week.
What is your sense of the probability of a 50 basis point rate cut this week? Is that too aggressive, do you think?
Well, I think based on most indications, there's a low probability of that, but there still is a small probability. There are a few officials that also probably will dissent in favor of a 50-point cut. And I think that sort of indicates the amount of dissents that we've had. And we haven't had a lot of dissents in the Fed until recently. So I think that is something to watch and think about.
One of the things that we know is that President Trump has been pressuring the Fed to cut interest rates. David Kelly over at JP Morgan Asset Management was saying a rate cut will increase risk for stocks, bonds, and the dollar if it's perceived to be driven by political pressure, if it's perceived to be driven by political pressure and doesn't align with the Fed's forecast for the economy. Fair statement?
I definitely think so. And the reason for this is if you look at the dual mandate, I mean, inflation numbers have actually been going up some. So, you're really sitting in a situation where if it's perceived that this is not given by sort of economic analysis and based on the, Fed's view, then real view, that could definitely cause people to wonder if it could go too far. And I think there's definitely people out there thinking about that.
So we had records today for the S&P and the Nasdaq. What does it say to you that the market is trading at record highs at a time when the Fed is going to be easing? Does that make you constructive on equities, or are you maybe a little cautious right now?
I'd say it's still constructive in terms of the signals because it's all about the magnitude. So how severe is the job situation versus the benefits of lower rates potentially stimulating the economy? And so I think that's where the market is right now. It's leaning towards having lower rates could be positive, and it's not more positive than, a worsening job situation. So I think we have to wait and see the next trajectory because the severity of multiple cuts could actually have a much more stimulative or a larger effect. So it's just the beginning now, I would say.
So a moment ago, I mentioned the U.S. and China reaching the framework on keeping TikTok running in the U.S. Maybe step one in trade negotiations between Washington and Beijing. Tariffs, as we know, are still in effect. How are you reading the tariff story right now as it relates to inflation?
Well, the challenge with this particular situation, if you look at this conversation with China, is it just shows how complex it is, that this could really take a long time to actually come to fruition, that there is a deal, which means that these tariffs stay in place and there will be ramifications of those tariffs. So I think what we've noticed, though, is that headlines are not moving the markets as much as they were before. So you're really not seeing as much reaction to such information. And I think it's going to take a long time, and it's going to be quite complex to understand the U.S.-China situation.
So we had yields down just a bit today. There's been a lot of movement in the bond market recently as players in that space have been discounting an aggressive Fed. How much more room to run is there in the bond market right now? How far can yields decline further?
Well, this is a very good question because a lot of times the market gets ahead of the Fed. So I think a surprising thing would be that we might actually be underwhelmed and the market corrects. This is because a lot of traders and investors have been getting in sort of ahead of the Fed. And if the Fed sort of slows down or pumps the brakes, you might actually see a tick up in yields, which is kind of counterintuitive for some investors. So my view is that it's going to be touch and go, and we're going to have to watch and see how the markets move. But moving abruptly more, I don't see that at this point. So I think we'll have to wait until later this week and see how that reaction goes.
So worst case scenario, though, we're just above 4% now in the 10-year in yield terms. Could we get back up to around 4.5%?
I mean, it's possible, but I think that would require us to have signaling that the Fed is still being very steady, and that has not really been the direction of momentum that you've seen with the Fed. There's been just sort of a slow pivot towards easing, and that, in some sense, I would suggest is a little bit less likely. You could see yields tick up a little bit if people are or markets are underwhelmed by cuts not coming as fast as they think, or people pricing in aggressive cuts that don't come to fruition.
I'm just wondering about a negative print on inflation, right? We talk a little bit about the risk of stagflation in the current environment, and I'm wondering whether that could precipitate a move up in yield at the long end.
Oh, definitely. And we started to see some indications in the technical signals this summer. We saw steepening trades going on for sure. And that could definitely be back in focus again if we start to see an acceleration in inflation and we're cutting rates at the same time. That always gets everyone concerned about low growth, lots more inflation, aka stagflation. I think that's the corner case that many investors are concerned about with cutting rates too fast.
So we had some dollar weakness today. That shouldn't surprise you. It seems like the dollar has been in this process right now of giving back a lot of the gains that we saw short while ago. Are we firmly now in a new paradigm where the dollar is concerned against the majors?
Well, this is a good question because we have seen a persistent weakness in the US dollar most of the year. And there's several factors that are against the dollar right now. So cutting rates tends to, in general, be negative for the dollar. Positive sentiment, cash flows regarding positive sentiment can also be negative for the dollar. So there's just a few factors at play right now that don't make the dollar look as desirable. So I think, that could continue to be the case, especially if we continue to see rate cuts over the next couple of months. So I think people are positioning in anticipation of that.
One of the things the market is prepared for is a dovish tilt as the Fed's Board of Governors kind of gets reconfigured here. And I know there's been some question at the margin about Fed independence. We spoke a moment ago about the influence that the president may be having on policy right now. Is that something that you're concerned about to a great extent?
I mean, I think the market is definitely concerned about that and has moved some on those type of reactions, especially earlier on. I think the fact that you have several more dissents and disagreement in the Fed is something that we're not used to seeing for quite some time. So I think as things start to shift even further, this question will continue to be at the top of minds. And if it becomes more apparent, you could see a market reaction where investors get nervous, thinking sort of, is this really the right decision given the current inflation scenario and unemployment or the current economic situation in the U.S.?
Katy, before I let you go, I have to ask you about the story in China. We had the monthly activity data in the prior session, both retail sales, industrial production coming in on the weak side. How do you see the global economy right now outside the U.S.? How do you see it performing?
Well, the interesting thing is in certain areas like Japan, emerging markets, they have been very strong. China, on the other hand, has lagged. For example, EM in general, but you're also seeing sort of positive and mixed signals in other portions of the Europe and also even in the US across different sectors. So I'd say that China is definitely one of the laggards when many of the markets have been up substantially this month. And that may be due to that fundamental data that's just suggesting there's not as much growth there right now.
Katy, we'll leave it there. Thank you so very much. Katy Kaminski is Chief Research Strategist, also Portfolio Manager at AlphaSimplex, joining us here on the Daybreak Asia podcast. Welcome back to the Daybreak Asia podcast. I'm Doug Krisner. So, as I mentioned a moment ago, officials from the U.S. and China reached a framework on keeping TikTok running in the U.S. President Trump spoke earlier to reporters in the Oval Office.
It's important, and it can maybe even bring us closer to China. We had a very good meeting with China. I was surprised. I didn't expect it to that extent. And I'm going to speak again with President Xi on Friday, and I think that'll confirm things up.
Now, China's Commerce Ministry called the deal a consensus, although some technical hurdles do remain. This breakthrough nonetheless could unlock a long-awaited Trump-Xi summit at APEC next month. For a closer look, we heard from Wendy Cutler, Vice President at the Asia Society Policy Institute. She formerly served as acting Deputy U.S. Trade Representative. Cutler spoke with Bloomberg TV host Sherry An and Annabelle Drulers on the Asia trade.
Wendy, always great to have you with us. What do you make of the Madrid talks? Because we saw some progress on TikTok, but at the same time, China, in the backdrop, continues to apply pressure to the U.S. chip sector.
Look, the TikTok framework deal is a welcome development. This has been a long-term irritant in our relations with China, so it's good that it's on the path to solution. But there's so many other issues that are challenging this relationship. And if it took 2 days of talks to basically deal with TikTok, it's hard to see these other issues being resolved over the coming months. I think it's just going to take longer.
Could something of a breakthrough be achieved in the President Xi Jinping and Trump leader summit?
Well, first, they're going to have a call on Friday. I think that call is important in that they can confirm the TikTok deal, and hopefully they can set a direction forward for their staffs to work together intensively leading up to the APEC meeting. But again, there's, between fentanyl and export controls and soybeans, there's just so many issues that these two countries need to work on intensively.
How big of a priority was TikTok in the grand scheme of things when it comes to those low-hanging fruits that the two countries can target at the moment, and what could be next?
So I view TikTok as of medium importance. What made it rise to the top was the Wednesday deadline to reach a decision or else to kick TikTok out of the United States. And so that deadline, I think, served to reach a resolution on in this area. But again, there are issues including semiconductors and soybean purchases and excess capacity. All of these issues need to be looked at between the two countries to help stabilize the relationship. I'm not talking about strengthening or improving it. I'm talking about stabilizing it. And that is going to take more work from both sides, particularly if the tariffs are going to be rolled over. The tariff cuts are going to be rolled over again on November 10th when their 90-day clock expires.
Yeah, you mentioned semiconductors. I mean, how much do we really need to read into the TikTok deal when you had as well China targeting NVIDIA, for instance, overnight, going back to a 2020 deal?
Exactly. And I have to say, as a trade negotiator, I have never seen a trading partner overnight in the middle of trade negotiations to hit the other country with such a strong measure like finding one of its key tech companies in violation of its anti-monopoly law. So I don't think that helped contribute to a good atmosphere in the talks, but I give kudos to both sides for finding a way forward, at least on one issue of concern, TikTok.
Do you think then enough has been done right now to sort of set the stage for any travel of President Trump to Beijing later this year, or does that sort of look unlikely still for now?
I think there's a good start, and Secretary Bessent mentioned that the two sides will get together at his level within a month. So you could see other issues being worked at the working level, and then being put forward to Vice Premier He and Secretary Bessent. So I think there still is a good chance of at least a meeting in Korea. I'm not sure if circumstances are right for a President Trump visit to China yet.
Wendy, I find it really funny that you mentioned imagining being a trade negotiator now and how NVIDIA became targeted while the China-U.S. conversations were ongoing. But that seems to be the case these days, isn't it? Even in the U.S., I mean, could you have imagined an immigration raid in that Georgia plant by South Korea after that trade agreement was announced? I mean, how big of an issue is this for Seoul? Because that issue seems to be dealt with. But what's happening to all of those investments going into the U.S.?
Well, I couldn't agree more. And I'm just returned from Korea. And believe me, I've heard a lot of concerns and a lot of caution about investing more in the United States. And at the same time that we were detaining Korean workers in Georgia, we're pressing the Korean government to set up an investment fund of $350 billion in the U.S., where basically Donald Trump would decide which investments made sense and which one should go forward. So it's kind of a tense time in Seoul. And I think that I was heartened by the Deputy Secretary of State apologizing for the visa raids and emphasizing the need to find a way forward on visas, because that's going to be critical if Korean companies are going to have the confidence to keep investing at those same levels in the United States.
Yeah, it certainly was a mea culpa of sorts yesterday. I mean, it's really hard to not sort of reinforce just that maybe the level of damage that's being done from this, and not just the signal that it sends to Korea, but also the signal it sends to other places like Taiwan, where you're asking businesses to shift investment to the US. But how much of this is a setback then? Just go back to what you learned in Seoul, and what did you learn more on the ground there about sort of the inclination to strike a deal?
Well, again, I think the Koreans are concerned about going forward with this huge investment fund. And after they read the MOU between the U.S. and Japan, which made it clear that while there's a committee where the Japanese can input into recommended projects, at the end of the day, it's a U.S. decision. Japan, focused on just getting those auto tariffs down, was willing to make that concession. It's unclear whether Korea is in a similar position, but still it places top priority on reaching an agreement with a close ally and getting the tariffs down, particularly in the automotive sector.
And talk about allies getting blindsided by the Trump administration. India, U.S. officials now there trying to negotiate a trade agreement. What are your expectations when we have, of course, seen the threats of 50% tariffs on all Indian goods?
Yeah, actually, I'm kind of optimistic on the India front. I think we got very close to a trade deal with them. And the signals coming out of both Washington and Delhi suggest that both sides do want to finalize an agreement. That's positive, but again, we need to keep in mind that trust has been broken and that it's going to be hard to get back to where we were. It's going to take time and effort, and hopefully a trade agreement concluded between the U.S. and India and a reduction in those high tariffs would be a positive first step to kind of repairing this relationship.
Wendy, thanks so much for joining us this morning. That's Wendy Cutler there, Vice President at the Asia Society Policy Institute.
Thanks for listening to today's episode of the Bloomberg Daybreak Asia Edition podcast. Each weekday, we look at the stories shaping markets, finance, and geopolitics in the Asia-Pacific. You can find us on Apple, Spotify, the Bloomberg Podcast YouTube channel, or anywhere else you listen. Join us again tomorrow for insight on the market moves from Hong Kong to Singapore and Australia. I'm Doug Krisner, and this is Bloomberg.